Today, April 29, 2026, the U.S. stock market demonstrated the resilience, finishing the day relatively flat despite massive geopolitical pressure and a spike in oil prices. The market is currently balancing high-stakes tech earnings against the wall of worry created by the ongoing conflict with Iran. Market summary, close, April 29, 2026. S&P 500, 7,135.95, minus 0.04%. Nasdaq Composite, 24,673.24, plus 0.04%. Dow Jones Industrial Average, 48,861.81, minus 0.57%.
Key news and market drivers. The Fed decision and Powell's future. The Federal Reserve held the federal funds rate steady today, as expected by virtually all of Wall Street. However, the bigger news was Jerome Powell's announcement that he intends to remain on the Board of Governors even after his term as chair concludes. This provided a sense of institutional continuity that helped stabilize the bond market, even as traders erased almost all bets for a rate cut later this year. Big tech earnings after the bell. The Magnificent Seven took center stage this evening. Alphabet, Google, and Amazon both reported Q1 beats that sent their shares higher in after-hours trading, largely driven by massive growth in AI-related cloud revenue. Conversely, Meta and Microsoft saw their shares slip despite beating expectations, as investors signaled concerns over the sheer scale of capital expenditure, $650 billion plus combined, required to maintain their AI leads.
3. Oil prices and the Iran blockade. Energy was the most volatile sector today. Brent crude jumped nearly 6% to settle at $110.44 per barrel, following President Trump's confirmation that the U.S. will maintain the blockade of Iranian shipping. With the Strait of Hormuz still effectively closed, oil tankers remain bottled up in the Persian Gulf. This is the primary driver of the pessimism currently being absorbed by the broader market. 4. Operation Epic Fury status. The White House claimed today that all military objectives of Operation Epic Fury have been met, but the markets reacted with skepticism. Prediction markets for a formal ceasefire by the April 30 deadline, tomorrow, crashed to just 15%, as the on-the-ground reality of Iran's missile recovery contradicts the victory narrative. This fog of war is exactly the kind of geopolitical noise that Tom Lee argues creates dry powder for the next rally.
5. OBBBA and the tax tail. New data released today regarding the One Big Beautiful Bill Act, OBBBA, confirmed that the restoration of full expensing, bonus depreciation, has led to a 12% increase in domestic capital investment for Q1. This fundamental tax tail is providing the floor for corporate earnings that is allowing the S&P 500 to stay near all-time highs, despite the energy shock. 6. Individual movers. Starbucks, plus 8.4%. Surprised the market with a strong earning speed, showing that the U.S. consumer is still spending despite higher gas prices. GE Healthcare, minus 13.2%. Punished severely for missing Q1 forecasts, proving that in this high valuation environment, there is zero room for earnings errors. Thanks for watching. Don't forget to like and subscribe for more market news. I'll see you in the next one.